Welcome back, everyone. Today we're going to talk about only three factors that affect Bitcoin's price. The first one is accumulation trends. The second one is a halving event. And the third one is liquidity. And the fourth one is ETF demand. Okay, it's four. So let's get started. So there are many, many factors that affect Bitcoin prices. We're only going to focus on those four that I mentioned before, but some other factors in case you're interested in doing your own research is growth in addresses. That's a long-term factor. Number of transactions. That's a long-term factor. Stock to flow model, moving averages, technical analysis. I know they say technical analysis is voodoo for men, but I actually think it works in crypto and Bitcoin. And it goes on and on. You can read this list on your own. So before we get started, let's first look at the short-term risk. As we're speaking, Bitcoin is breaking out. It's over 38,000, something like 38,400. And this is slightly old. This says November 24th on it. This is a crypto fear and greed indicator. So it's a contrarian indicator. So right now it's at giddy. Actually, today it's probably around 68, but by tonight it's probably going to be updated back up to 73. So I figured, hey, let's just leave it at 73. So again, this is a fear greed indicator. And when it turns green, like where it is now, where it's greedy, where the only fear is where am I going to get my champagne? That's only fear right now because we have so much exuberance. So when we're at that level, that means that the market's usually hitting a local short-term top, a local top as they call it. So just be careful short-term. But I said when I'm presenting to you today's long-term factors. So let's go to the next slide. Short-term, again, what we're seeing is plankton, or these are shrimp. So I'm not sure if you know this. They separate the tranches. They tranche out the holders, investors, according to how much Bitcoin they own. So the smallest ones are called shrimp, or in this case, they're calling it plankton. And then the largest ones, of course, are whales. And so what's going on now is plankton, the smallest holders, are starting to buy Bitcoin more aggressively. And again, this means we're probably at a local top. So you just, again, be careful out there. So let me get to the long-term holders. The long-term factors now that I mentioned before, the four factors. So finally, here we go. So these are the four factors I mentioned to you today that I'm only going to focus on. So again, they're the halving event. What are the post-halving returns? When does it occur? What's liquidity? How do you measure liquidity? What's accumulation and how do you measure liquidity? Is it short-term accumulation, long-term accumulation, and ETF demand? Well, by ETF demand, I mean spot ETF, because we already have a futures ETF. So let's get started. Bitcoin halving returns. If you look here at this chart, I really like this chart for a few reasons, but one reason I like it is because it shows you the long-term returns after each halving. So in the first halving, Bitcoin went up 539 times. I know that's a huge number. During the second halving, it went up 112 times. And during the third halving, it went up 21 times. So you could see after each halving, Bitcoin went up a lot, but it's been going up less for each halving. The second thing I want you to notice is that we're not going to just have a halving going up immediately. And I'm sorry, let me repeat that. Bitcoin's not going to just go up immediately after the halving. It's going to go up subsequent to the halving. It could be several months after the halving when Bitcoin goes up. So just be careful of that. I don't know why I had bubbles behind me, balloons, but whatever. Shit happens. So let's go to the next slide. So you're seeing here that the halving event, which I didn't explain to you, is a very strong positive factor on a crypto calendar. Now, the having been of the crypto calendar is not a date, by the way. It's an estimation, and it's estimated to occur around the 3rd to 4th week of April. And this occurs when miners mine block number 810,000. Okay, next. The second factor I want to tell you that strongly affects all risk assets, including Bitcoin and other types of crypto, are liquidity. And there's different ways of measuring liquidity. You can look at it. Interest rates, bank reserve requirements, the discount rate, the prime rate. You can look at, people even look at the prime rate anymore? You can look at bank balance sheets. And in this case, what I'm looking at is money supply. And you can look at US money supply, or what's even better for Bitcoin, since Bitcoin is a global asset, is the global change. So global change in money supply, M2. And I like this chart for a few reasons. Number one, it's global. And number two, it shows you the correlation and how closely tied the price movements are of Bitcoin to global M2 money supply. And this comes from Raoul Pal. He does GMI, Global Macro Investor. He also has another chart. I don't think I have it in this presentation, but he does a regression that shows liquidity versus movement and risk assets, including S&P 500. And it's a very close correlation. As a matter of fact, the R squared is at 82%, showing that the price of risk assets like the S&P 500 is closely explained by liquidity. And here's another way of explaining liquidity by GMI, Global Macro Investor. And Raoul Pal shows that liquidity is going up and down, and he's showing it year over year. And as we all know, there was a very strong move in risk assets in 2020 when the Fed increased its balance sheet by trillions and trillions of dollars. And you could see that spike up during 2020, 2021. That's the first thing I want to talk to you about. The second thing is that liquidity just isn't interest rates. It's balance sheets. And it's even more complicated. Like for the United States, you can include Federal Reserve balance sheet, you can include a Treasury wallet, and you can include reverse repos. So it's a lot more complicated. And here, GMI is also including the PBOC, the BOJ, Bank of Japan, China, the European Central Bank balance sheet, the Bank of England. So he's consolidating everything. One last note before we go on to the next factor. If you want to know about global liquidity, you don't have access to GMI, one of the best places to look is Cross Borders Capital. Mike Howell, who used to work at Salomon Brothers, has been keeping track of global liquidity going back like 30 years, maybe even more than that. And he has some free media YouTube videos if you want to watch them. And what he does is he shows historical liquidity, how it goes up and down, and it's like a sine wave. And right now he's saying it's going to keep going up for the next perhaps 2 years. So going forward, especially in 2024, we're going to see a positive increase in liquidity. So right now, if you look at this chart, risk assets have been going up, and you're not going to see that in this chart. It was in the previous page. But basically, risk assets like tech stocks and Bitcoin have been going up because liquidity has been less negative. So it's been less bad. But we haven't had sharply growing liquidity. You're going to see that next year. So let's go to the next factor. Oh, before we do that, I want to talk to you about the difference and effect of what we saw earlier with the Federal Reserve and global balance sheets. So there's a difference between the debasement of the US dollar and other currencies and inflation. You get inflation after debasement. And confuses people sometimes. I don't know if I should get into this, but I'll talk to you quickly about this. Basically, people get confused. They're like, Why why is Bitcoin going down if we have inflation? That should be good for Bitcoin. But what's good for Bitcoin risk assets is more liquidity and a U.S. dollar debasement, and that occurs when we're getting into recession, for example, and then the Federal Reserves, I should say, central banks across the world, they start stimulating. And one way they do that is by lowering rates. Another way is by adding on to their balance sheets. So just to be clear. So prices in this chart from Bloomberg, you can see are 10 times higher than they were 60 years ago. That's why you must, in order to not lose money, because when there's debasement, high inflation, that's like a tax. It's a hidden tax. If you don't want to lose money, you got to buy Bitcoin or real assets like real estate or gold. Okay, next slide. What I want to tell you quickly here, another thing is, this is what you're seeing here is unprecedented. We have long-term holders buying into local top. And as I mentioned to you earlier, long-term holders, these are big holders, institutions. These are Bitcoin whales. They usually sell at local tops. A local top is what we have right now with Bitcoin. Bitcoin is up 130%. So this is a time when long-term holders, big whales, this is when they sell, but they're not selling, they're buying. And if you look at these little squares here, anytime a whale, and that's the one on the top, you probably can't read it, but the row on the top, those are whales, those are the largest holders. And then as you go towards the bottom, those are smaller holders. So the last row there, which is less than one, that's a Bitcoin holder that has less than one Bitcoin. So those are your shrimp of the world, your plankton. And they're buying too, as I mentioned earlier. So everyone's buying because it's in blue. When the cells are in blue, and when the cells in blue going up and down vertically, that means everyone's buying. It's unprecedented. So again, this is one of the most important charts that I've ever showed to anyone, because it's shown that long-term holders refuse to sell when they typically sell. And short-term holders are buying, and I think that they're not buying because of FOMO. Maybe they are, but there's another reason they're buying. Because remember, people that buy Bitcoin, they're not just people in the United States. There are people living in Argentina, Turkey, Venezuela, Ukraine, Israel. These people are seeing the potential for they're already seeing the debasement of their currencies. And they're seeing possible control by governments because of war or whatever's going on. So there's a lot of factors besides wanting to just throw money at Bitcoin because it's a good investment. People have their livelihoods at stake. And that's why I don't even want to say the word investors, small holders are hodling Bitcoin because they do not trust their governments. They see a lot of risk, a lot of governance risk, and they see the huge debasement of their currencies. So that's the key factor here I want to talk to you about. That and that long-term holders refuse to sell. So not only that, we're going, and I'm showing you the next slide here, we're going into the Bitcoin halving for the first time where long-term holders all holders in general are hodling Bitcoin. So they're holding on to Bitcoin for their dear life. They do not want to sell. It reminds me of, what's his name? Charlton Heston in Planet of the Apes. He says, "You're not going to take this from my cold, bloody hands." He said something like that. And that's what hodlers are doing. They refuse to sell before this Bitcoin halving event, despite of much higher prices in Bitcoin. It's unprecedented. Again, I'm repeating myself, but it's worth repeating. Long-term hodlers, holders are still buying. And this chart here is showing the ratio of long-term holder supply, long-term divided by short-term holder supply. Excuse me, I'm losing my voice. And again, it's shown that long-term holders are accumulating and refusing to sell. And by the way, the amount of coins being held long-term that's not on exchanges, that are just being held in wallets, is at a historical high. I forgot what it is now. I think it's a 14 million coins, something like that. And over 4 million coins of that have been lost. They can, even if they're accounted for, they cannot be sold because people lost their wallets or whatever, their passwords. So I wasn't sure about including this chart. This chart shows that despite a lot of the supply being in profit, and you can see that blue line going up, that means the percent of supply in profit. Despite that higher number, investors and hodlers refuse to sell. So this is just reiterating what I showed you before, but it's another way of showing you that holders are at profit, that there's a lot of people, including short-term traders, that have profit in Bitcoin that still refuse to sell. So let's go to the next factor. I promised I would show you 4 factors. The next one, I think this is the last one, is ETF spot demand. I won't talk to you too much about this because there's so much publicity about this. So the publicity is about the potential of an ETF, spot ETF, Bitcoin ETF, within the next few months. And Bloomberg thinks this may occur. I'm not sure if you can see that, but they're expecting this to occur next year, by next January, and they think there's a 90% chance of a spot Bitcoin ETF. And if you look here at this chart, I know it's hard to read, but what it's showing you is that assets under management globally are $131 trillion. So there's a huge potential here. There's potential that even if investors or asset managers put a small amount of their assets under management into Bitcoin, it'll have a huge effect on the price of Bitcoin. And I think there's a high probability of all these events happening at once. I have another video for you, but my point is there's something called joint probability. That's when one or more independent events occur at the same time. And I think we can have all 3 or 4 events occurring at the same time, meaning the Bitcoin halving, a spot ETF, accumulation of Bitcoin, and there's one more I'm forgetting now. God, what is it? I'm blanking out here. But, and I said spot ETF. Basically, I think at least three events are going to occur at the same time. And there's a very high probability that this is all going to occur by June 2024. I just remember the other event, that's lower interest rates and higher liquidity. I think all these events can occur within 6 months. And if that occurs, you're going to have a quick pump in the price of all crypto prices, including Bitcoin. So that's it for today. I hope you liked this video. And if you did, please subscribe to us and smash that like button. Thank you. Bye-bye.